It's been a roller coaster ride for crypto investors. Cryptocurrencies are making a slight recovery after wild swings over the past 24 hours that raised about $460 billion from the market. Bitcoin has managed to push back up above that key $40,000 level after tumbling to $30,000. Ether is trading at around $2,700 now, and major crypto exchanges, including Binance and Coinbase, were temporarily down following the steep drops that we saw. So what fueled the fall? Well, the Chinese central bank's announcement that it would not allow cryptos as a form of payment triggered that sell-off, and the statement worsened the bearish sentiment. Over the past weekend, crypto's biggest backer, Elon Musk, he hinted that Tesla may have sold its Bitcoin holdings. All of this highlights the volatile and speculative nature of cryptos. For a closer look, we're joined now by Zennon Kapron, founder of fintech consultancy Kapronasia. Thanks for joining us. Now, is this the end of Bitcoin's blistering rally?
I think certainly not. I mean, we've seen Bitcoin go up and down over the past decade with similar gyrations. The numbers are much higher this time. Obviously, in the past, it was maybe getting up to $1,000 and dropping down to $500. Now, obviously, we got to a peak of just over $60,000, and that went down to $30. This is pretty much par for the course for this cryptocurrency so far.
Following China's move, what other countries are likely to clamp down on cryptocurrencies? And is it possible to quantify that impact?
Well, realistically, the levers that the governments have are around where crypto hits fiat currency. The Chinese government has never been terribly open to Bitcoin exchanges or cryptocurrency exchanges, as well as banks handling crypto assets. So really their announcement of a couple of days ago is nothing that much new. It maybe just codifies what was already in practice most of the places. We've seen similar governments around the region and around the world be at times adverse, at times pro-crypto. So it remains to be seen where all of the players fall out from this ban, or if other countries will go along the same lines as China has to kind of redeclare their stance on crypto.
Right. Over the past few months, several institutional investors have committed to digital assets. Now, will the past days' movements kind of hamper that kind of investment confidence in the past that investors are going to look to crypto for?
And certainly over the past couple of years, we've seen cryptocurrencies in general become an institutional asset, or an asset that's of interest to institutional investors. And they don't make those decisions very rapidly, nor do they move in and out of assets very rapidly. So it's really, I think, the investors that may be a little bit scared off are the individual investors who have put some of their money in. Many people have a good idea of what risk they're willing to tolerate, but many may not, and see the promises of riches cloud their vision in terms of how much they've put into the market. But certainly, I think the institutional investors, that's a very much a new thing for this wave of cryptocurrency. And I think we'll see that continue, and they won't be pulling out of the market anytime soon.
Right. On crypto exchanges, why are they so unstable, and how does this affect investors?
Yeah, I think the volumes that we've seen over the past couple of days have really been unmatched in the past couple of years. And as crypto has gained in popularity, you've seen many exchanges like Binance that was mentioned earlier as really testing the limits of what the systems were capable of. And I think we've seen that even with Coinbase. There were some outages over the past couple of days. And so really, a lot of these exchanges are pretty well funded. So I think this incident will make them kind of rethink what their technology infrastructure is and what they need to do in the future to be ready for this to happen if it happens again.
All right, Zennon Kapron, thank you for your insights.